evening, everybody. How y'all doing? How y'all doing? How y'all doing? Welcome, welcome, welcome. You're far too kind. Thank you, as always, for hanging out with your boy. Do I have this live? Yes, it's live. Shout out Trader Mo with the clutch finish. Trader Mo was like, hey, go get the top spot today. Shout out Trader Mo coming through in the clutch, swooping in with the loop, the swoop. You feel me? What's up here to learn the chef? You learn to share. Yes, I caught you slipping. I caught you slipping here to learn to share. I caught you slipping. I forgot to make the video public. I forgot to make it public. And Mo was sitting, Trader Mo was like 28, 29, 6:30. What's going on, everybody, man? Good evening, good evening, good evening. If this is your very first time tuning in to Tim's Tidbits, allow me to say, welcome. Hold up, y'all. Hold up, y'all. Hold up. Let me see here. Save to Dropbox. I just saw an email right before I was logging on. I don't know how long the email was in there, but I saw the email right before I logged on. Done. Save. And let me go. If I had my Mac, I could have just airdropped it to myself, but I'm not on my Mac right now. So I have to do it the old-fashioned way by saving it to Dropbox. Going into Dropbox, then saving it from Dropbox. I would like to. I just want to thank you, Heavenly Father. Where's the freaking? I'll just do it that way. More than one way to skin a cat. There you go, right now. Oh, there it is, right now. I didn't see that in that corner. Let's put it on that screen. Down, Lizzo. Okay. I just want to thank you, everybody, for coming and subbing with me. I want to thank you. On May the 2nd, 2023, we got 2,500 subscribers. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in, I still want to say welcome and give you a nice hearty thank you for making this accomplishment right over here. Y'all see it? You see it. You see it. You see it. You feel me? We have made it there. We have made it to our goal. Yet another milestone being met by the Black Spiders themselves. The one and only community on Al Gore's internet, where it's all love, where it's all fun, where it's all edutainment. There's no malice, not even from the eraser lickers. There's no strife. There's no beef to be spoken of. It's all peace and love. It's all kumbaya. It's all ni hao, how you doing? Hey, man. Hey, look here. Congrats on the 25. The 25. The 25. Hey, Robson, come here, Robson. I gotta tell you something. Everybody else, y'all stay back. Robson, hold on. Come here, hey, Robson. Come here, Robson. Let me tell you something. Come here, Robson. Hey,
Robson. Hey, Robson, what's going on, man? How you doing? Yeah, man. Yeah, just chilling. Ain't nothing going on, man. Yeah. Robson, where you going, man? I'm going nowhere. Come here.
Hey, man. Hey, I'm pretty sure we'd have separated the wheat from the tear now. That's about 5 minutes in. We're going to go on and get to it. I shared a few things with all channel members today. If you are a channel member, I was bored and I did an impromptu live. And it was just watching the price section. If you was tapped in, you had the opportunity to see why. You had the opportunity to see why I hate taking the entry on the retest. You had an opportunity to see why firsthand, why I hate taking the trade on the retest. Because every time I take the trade on the retest, I get slapped upside the head. Y'all got an opportunity to see that firsthand this morning. Speaking of firsthand, shout out Stacks. Is Stacks in here tonight? Stacks, I don't see Stacks. I don't know if I don't see Stacks. Stacks usually be done said something. He probably not in here tonight. But shout out Stacks. After I was in the position and I got I said I'm about to get smacked up on this, right? And I got smacked up. I said, hey, just gonna be one of them days when we melt down. It ain't gonna give me an opportunity to get short. So I'm just gonna let it go, right? And it just melted down as you see. But the reason why I say shout out Stacks, right, is because while we were, watching the charts, Stacks put something in the comments. He said, hey, we still in the premium. You shorting in the premium, right? He was like the higher time frame, you know what I'm saying? We still in the premium, right? And I'm like, what, daily, whatever, right? So I'm looking, I'm like, nah. And I'm like, oh, you talk about the overall range. I was like, you talk about the overall range, the equilibrium, right? So from our monthly box bottom, right? From our monthly box bottom to May 1st high, the equilibrium was 41.3750, right? That was the equilibrium. We was up here somewhere when I was I was buying. I was going long I was looking for a long entry. Let me turn this off. I was looking for a long entry on a retest of a breaker up here somewhere. Got busted in the head, right? And it melted down. It came all the way down. We talked about this daily fair value gap right here. We talked about a lot of stuff on the live. I ain't gonna re-talk about now, right? But I said shout out Stacks because he brought my attention back to this weekly equilibrium, right? I mean, this range equilibrium, right? And after we got off the live, right, I had already set a few alerts, right? I set a few alerts. This alert, matter of fact, I need to take that off because it's still there. Well, I'll leave it there and I'll explain why I put that alert there in a minute. All right. So hold on. Why in the world do I got this here? Oh, that's that wick. That's that weekly wick. Okay. Yeah. So Stacks pointed out that weekly wick and he pointed out the range equilibrium. And we had a discussion about, he was like, hey, I know we usually mark up the wicks for going up. And I was like, nah. That's not why we mark them up. We mark them because those are the PD arrays that we watching, right? If we got a discount PD array, y'all remember PD arrays can either be targets or entry points, right? So You know what I'm saying? His target was this weekly consequent encroachment of this weekly wick right here. And I was like, ain't nothing wrong with that. If you get short up here, that weekly wick, that weekly consequent encroachment is a perfect target. You know what I'm saying? There's nothing wrong with that. So you're not going against what we usually do. You're actually doing exactly what we do. When we mark up our PD arrays, if you're in a position, the PD array is a target. For terminus, for low-hanging fruit, that's a target. If you're not in a position, the PD array is a possible entry point, right? So you're doing exactly what you're supposed to be doing, right? Now, and the reason why I say shout out Stacks is because once he brought my attention to, hey, this is the range equilibrium, right? Can somebody, other than the eraser liquor, please put in the chat what price typically does in front of big news events? And also tell me what big news event is coming up tomorrow afternoon. Again, what does price typically do in front of big news events? And what big news event is coming up tomorrow afternoon? I'll wait while I sip on some water. Somebody put that in there. I ain't asked you what you was targeting, Power Moves. I said, what do it do? What? Yeah, that's better, Power Moves. Before big news events. Eraser liquor, you may speak. Okay. Will, the first one that I saw. Will is the first one that I saw. Partially right, Avery, but Will, this is what it does. This is the first thing it typically does. Finds fair value. It typically finds fair value or finds equilibrium. That's the same thing, because fair value is at some equilibrium point. It's at some equilibrium point. Equilibrium just means you're 50-50. You're not in a premium, you're not in a discount, right? Fair value is at some equilibrium point, right? Find equilibrium. Stop trying to write it in now. If you wrote it in before I start saying it, congratulations. But if not, in the middle, right? If you wrote it in before I start talking, congratulations. If you didn't, good job cheating. Now, and then FOMC, J Powell. Yes. That's what's going on tomorrow, right? Fed rate decision. All that right there. Hold on. No. Let me back it up. I'm sorry. FC. And here to learn. FC was first. I jalapized. FC was first. Here to learn, his share was second. Will, give me my congratulations back. Give it back. Cheating off people paper. Will cheating. Get off my screen. Hey, so now that we got that out of the way, Stacks was like, hey, you're in the premium. I'm shorting down to that weekly wick down there, right? And I was like, hey, the price is just melting down. It's not trying to come back up at all. It's just melting down, right? And so then I said, let's see where it's trying to go. And we opened up the chart. I said, boom. Price needs to get back to at least this fair value gap right here, this BISI right here at this break-in market structure, because there's a breaker right there, right? I said there's a breaker there and there's a breaker there, right? I said price needs to get to at least this breaker at that fair value gap, right? But we got a breaker here and we had another 4-hour fair value gap down here, right? Look where price came to. What did price come to? Price came right down to that breaker right there. That 11 a.m. breaker right there, right? Once price, and that's right there. And I said, Stacks, there go your 41, your 4109.50. There go your target. He had already said he hadn't got, because he was scapping him down. I just hit 10. I just hit 5. He was scapping it down. I said, Stacks, there go your target right there, right? And then, so once we rejected off of this breaker right here, I came in and I set this alert right there, right? Let me show you what that alert says, right? That alert says, where we at? Took sell side, right? That alert says took sell side. The reason why I put that right there is because if we took out that sell side, that was no bueno. That was very, very no bueno. You know why that was no bueno, right? You know why that was no bueno? Because price, since we were down here at a breaker in front of heavy news, right? Price needed to get where? Where did price need to get? C-Walk? C-Walk, tell them again. Here, tell them C-Walk. Where did price need to get to? Price need to get, it need to run back toward equilibrium. Very good, C-Walk. Very good. Price needed to get back to equilibrium. So I set this alert because I wasn't going to sit back here. And if we took out this sell side, that was going to be no bueno, right? As you see, I got a couple other alerts over here, right? This alert right here says bullish breaking market structure, right? Where's the price at? 41.22. See that little green line right there? That little green line right there? I was watching that little green line, right? Because if we broke there, show it to you on the lower time frames, all right? If we broke there, right there, that was a bullish breaking market structure, right? That was a bullish breaking market structure right there. If we broke that 5-minute high right there, right? So I wanted to be alerted whenever we broke that 5-minute high right there. That's why I had that alert over there, right? And if you see this other one up here, you see it says, this is on SPX. It says at 41.12.92, alert me to let me know when we hit SPX buy side liquidity at 41.92, right? That, where is it? 41.12.92. And that should be a high right over here somewhere, right around here. Might be on 1 minute. Nope, that's it right here. That high right there. Let me see what it looked like on 1 minute, because it don't look like it looked when I marked it. $41.12.92. Go back. 41.12.92. One of these highs somewhere around here. 41.12.92. But don't tell me what time it triggered. 2:30. Oh, that's 2:30. Might be a little bit earlier than that. Might be a little earlier than that. Low battery over there. Might be a little earlier than that. I guess I could have put a line there and just looked back. Right there. There you go. There's the high right over there. That high right there. right? I wanted to be alerted when that high got hit because I was in some same day expirations, right? That's why I want to know when that high get hit, so I know when to get out of my trade, right? And when I tell you that premium, when it hit that high and that premium started dropping like a freaking brick, I was like, I didn't get back in here in time to catch what I wanted to catch, but I caught more than I wanted to. I got more than I wanted, but I didn't catch what was there because that thing went to dropping. But now I said all that to say, right? I said all of that to say, first of all, before I say that, y'all know I'll be speaking like super off the cuff, right? I'll be speaking super off the cuff. Back when I first started trading, right? I thought how can I say? I thought watching people break down their trades was like the most valuable thing in the world. I thought trade breakdowns was the most valuable thing in the world. I said, if I could just see how they do it, I can do it too. But I quickly learned that for little Timmy Rogers, trade breakdown videos are the most useless pieces of crap on Al Gore's internet. And that's just speaking for me. If you find value in trade breakdown videos, have at it. Look at the trade breakdown videos. But I just feel like they are the most useless pieces of crap on Al Gore's internet. Now, I won't say all trade breakdown videos, but 99.98% of them are useless. And why do I say that? Because they don't tell you how to they can't show you, how can I say it? They can't show you what you need to navigate price every day. They can I liken it to when I was a wedding photographer and videographer, where a couple would send me a video or they would send me a picture and say, can you recreate this for me? Now, if they spoke to my wife, she would say, sure, we can. Because my wife understood what they were asking, right? She understood that they just wanted to feel the joy of seeing themselves look beautiful in an image or a video, right? But when you ask me, can I recreate it? I'm going to tell you no, because you don't look like them. You don't live where they live. I'm not the photographer or videographer that did that. We don't have the same editing style. So unless you're that person, we're in that field at that time of day, using that camera, editing in the exact same way that they edit it, I can't recreate that for you, because that was something that happened at one time in that place. And that's what trade videos are. That's what trade breakdown videos are. That's something that happened that one time for that person, based off their risk tolerance, based off their trader identity, based off the fact if they patient and let it run, based off the fact if they not patient and they trip, they stop, based on the fact that they average down, based on the fact that they scale in, based on
You can't teach me how to navigate the market every day by breaking down your trade, right? You know why? Because most people don't give you the overall why behind what they did. That's why when I talk through a trade, or if I talk through a scenario, it take me forever to explain it, because I'm trying to make sure I instill the why behind why I'm watching this PD array, why I'm thinking about entering on this PD array. Why does this PD array negate the trade for me? Why do I expect price to go there? Why did I pick that target? What made me say, oh, we're not going to hit that target? Let me protect some profit. All of that. And most people, when they do their trade breakdowns, they don't tell you all that. They just say, hey, I went long here, I rode it for 10 points, and I got out. Here's another trade. We broke out here. I went long there, took it another 10 points, and got out. Shout out to Homie Robinson. I don't trade IDR, but he make me feel like I can, because he says, hey, DR has a ladder, right? If price comes here and it trades back inside the ladder, right? When it typically comes out, it's going to give you 5 to 10 points coming out. So wait until it confirms. And then when it's coming back in, you don't want to take the trade as it's coming back in, because it may continue to slide down. Wait for it to come out. And we know 8 times out of 10, if it comes back out, it's going to give you 5 to 10 points. So when it goes in, set your order to get picked up as it comes back out. And you're almost guaranteed 5 to 10 points with very minimal risk. So it's like he's explaining to you how to use the DR and IDR, even if you don't even know how to use it. You don't even know what it's doing, but you got a thesis of, once it goes outside of this and confirms, if it go back in and start coming back out, 8 times out of 10, it's gonna give me 5 to 10 points. Don't quote me on the 8 times out of 10. I'm just saying. But most trade breakdown videos don't do that. They don't give you the why behind what you're doing. It just says, hey, if you wanna make $20,000, all you got to do is wait till it breaks out and then go long. And if it stops you out, just keep doing this. That's just like one time a little fuzzy red bear running through the woods told me, hey, just make this EMA line straight. If it's a green candle, touch it, buy. If it's a red candle, touch it, sell. I said, what in the stole the church's money is going on here? That ain't no strategy. What are you talking about? Why am I pressing buy and sell? Like what? Come on, man. Hey, I'm sorry, y'all. I got off on a tangent. Let's go back to the charts. Now, I said all that to say, right? The reason why I said this, I told y'all it was no bueno if we, let me put this mic back down. I told y'all it was no bueno if we broke this low. Why was it no bueno? Because price, we're getting ready to go into some heavy news tomorrow. So price needs to seek fair value, right? And the shout out Stacks for bringing my attention back to it. In the price range that we're in right now, right? In the price range that we're in right at this immediate moment, right? You can pretty much tell where equilibrium is. Look how price, when we got here, we consolidated in this area. You can pretty much tell the algo feels like there is fair value in this. Let's squanch it up a little bit. Look how many times the algo felt like it was fair value in this area right here. Look how far back. Look how far back we can go. Back to March, May, a year ago. A year ago, the algo has found fair value in this area right here. Look how many times the algo came to this area and just hung around this area right here, right? A year, right? An entire year. But just looking at the range that we mapped out, you know what I'm saying, for our draws on liquidity on the monthly level, right? This is the monthly draw. This is the, you know what I'm saying? Remember this buy side that we put there? We was like, this is buy side we got to be mindful of going there, right? On this, the only sell side we had to be mindful of. And if you look at the range we're in right now, the current price leg that we're in right now, fair value is right there at 41.3750. So knowing that price needs to, somebody put a one in the chat. Somebody knowing that price typically moves back to fair value in front of big news, right? After taking a loss, right? You will be able to keep your head. You will be able to keep your head and say, hey, we have come down to a 4-hour breaker, right? A 4-hour breaker, right? We filled a daily fair value gap. We've come down to a weekly consequent encroachment of a wick, right? And then fair value is above us. So we got a bullish breaker, right? We came down and filled a bullish fair value gap, right? We came down to a discount consequent encroachment, which is it's bullish because it's below price. So that's bullish, that we're expecting it to support price. So we've come down to all of this support below fair value. So now, if the algo is going to do what the algo does, and it will, going in front of coming up to big news, the algo wants to seek fair value. So after taking a loss in the morning, you keep your head and you can look at the charts and say, okay, we've come down and we've hit these areas, right? We've come down and hit these areas. And now on the 15-minute candles, right? We are respected. We came down to consequent encroachment, rejected, right? Dilly-dallied a little bit, came back, did not hit the consequent encroachment, rejected again, right? So now you're waiting for the setup. You're waiting for the setup, and you want the setup on at least, you want it to start playing out on at least the 5-minute. Why? Because the 15-minute is like, it gives you everything. But the 5, when it's set up on the 5-minute, you know that's giving you like a precursor to what's going to happen on the 15-minute. So once it's set up on the 5-minute, then you can use the 1 minute to get in extra early and reduce your risk. But without understanding how to read the tape, without knowing how to read the tape, you wouldn't know to do that stuff. You wouldn't know where to look for the stuff to start setting up. So you see here, like this is when we touched it the first time. This is when we came back again. And right here on the 5-minute, we went below, rejected, and took off.
right at that point. Right at that point. Soon as we did this right here, soon as we took off right there, right? Soon as we took off right there, I said, I need to be alerted as soon as we break this high right here, right? As soon as we break that high at 41.22, send me an alert right here. Bullish breaking market structure, right? Also, when I let me know if we break down below this low right here, right? If we break down below this low right here, I want to see us reject off of it, right? If we break down below this low right here and keep sliding, that's no bueno. So let me know if we break here. Let me know if we break there. The reason why I want to know when we break here is because that will give me a 5-minute breaker right here. This entire up move will now be a 5-minute breaker once we trade back above it, right? If we break down here and keep going, that's no bueno, right? Because we sliding through weekly levels down here, weekly and 4-hour levels down here. Now, got all of that set up, waiting for the alerts, right? Now that we got this high and we got this low and this high, right? That's when you want to watch it on Skinny Mini. Remember I told you Skinny Mini will give you like the ultra early. Skinny Mini will give you the ultra early entries. You know what I'm saying? Now, if you are the type that takes the trade off the 1-minute breaking structure, right? This entry right here, this could have got you an entry right here, coming down to this fair value gap right there. That could have been an entry right there. That fair value gap right there, right? Coming back into this 1-minute breaker over here could have been an entry. It would have made your butthole a little tight right there, but you would have been just fine, right? You would have just been fine. If you got in there at 113, your stop would have been 5-point stop would have been down here below this consequent encroachment. You know what I'm saying? That would have been fine, right? You would have been fine. Your butt would have got a little tight there, but right. So this is when the alert go off. Alert went off right there, right? Alert goes off right there, right? When alert goes off, now what are you looking for? You're looking for price to come back down into your imbalance, right? You're looking for it to come back down into your imbalance, right? So now we came up, took out that right there. Poof, took it out. It's gone. Now, battery down over there, right? We're consolidating. Don't worry about that. That's just a little fake. Try to scare you out, right? Now, how do you know this is a fake? Just try to scare you out, right? By understanding how price moves, right? What have we been doing in this area down here forever, right? We've been consolidating forever. We're just soaking up liquidity. We're consolidating and just soaking up liquidity, right? All right. So right here, we come back up and get back up to this high right there. We leave this area. So everything from this high of this candle right here at 1225, right? This is the candle when we left. From the high of this candle at 1225 down, all of that right there is now considered a balanced price range, right? Then once we consolidate here for a little bit, we take off again. So everything from this 1235 candle this way coming down, all of that, we already said this was balanced price range. So now we know all of this right here is all the balance. Let's put a line right here. We're gonna put a line right there, just like that, right? Right there, just like that. All of this stuff, we can actually go to the high of the candle if you want to. Right, we go to the high of the candle if you want to, but all of this stuff right here, from the closure of that candle there, that way, all of that is a balanced price range, right? And where is that balanced price range at?
just a stone's throw away from the high where you was looking to say, let me know when we get a break in market structure here. Why is that? Because on the 1 minute, right, you can do a lot of the 1 minute is where it's doing all of that balancing and rebalancing it. It's doing, look at all this right here, doing all this balancing and rebalancing on this 1 minute, going up, going down, playing with your emotions, going up, going down, doing all this balancing and rebalancing, right? And then when it get done, pops out, whoo, I'm finished. Let you know, bing, 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 I'm done now, right? And then came over here, went again. So now, where you going? Here's your fair value gap right there. There's your imbalance. After you leave, right? After you leave that area right there, there's your imbalance right there. Right? Come back down into it. Take your entry, butthole get a little tight, but you ain't worrying about it. Why you not worrying about it? Because everything down here is all a balanced price range. So if you entering here and your stop is down here below this low, right? Everything down here is a balanced price range. You're not worried about price coming back down to get you right there. All right. Now, come back up. Well, Tim, what is this box right here? I'm glad you asked that question, little Timmy Rogers. Right? Entering right here. Right? Now this morning, when I took the loss, with a small portion, just 2 contracts, right? So when I entered here, I went in with 1 contract right there, 1 contract. Why did I go in with 1 contract? Right? Because right here, as I'm entering there, right? When we came up here, right? When we came up there and made the high and came back down, right? Right? When we came up and made the high and came back down, we never broke down below it. So I don't have a breaker over here. All I got is an imbalance. I got an imbalance and a mitigation block, right? So I only put on 1 contract right there because I don't have the breaker. So I'm not going heavy duty. And plus, I've already taken 1 loss and I took a loss with 2 contracts. So what do? Half the risk that I went in the first time. I went in with 2 contracts. That way less than my risk. I usually go 5, but I went 2 because it wasn't my normal setup. And I took a loss with 2 contracts. So instead of going in with 2 contracts or going in with 3 contracts, because I could have went in with 3 contracts because my normal risk is 5 contracts, but I took a loss with 2 contracts. So I went in with 1 contract, right, on this imbalance, right? Once we took off, got a break in market structure, right there. We came up, came back down, took off again, right? Got another break in market structure right there, right? Once we got that break in market structure right there, where did price go? Where did price go? All right. If you look right there on the 5 minute, that right there is a fair value gap, right? That's a 5 minute fair value gap, right? And we're up above this balanced price range down here, right? All this right here, we took off all like from here, all of this over here coming down because see, we left that area there. So all of this over here is a balanced price range with that 5 minute fair value gap, right? So then once you are in the trade with half the risk, right, of what you had lost, All right. Not being greedy. Now price is showing you. What is it showing you? We're coming back to the equilibrium. How is price showing you that? One, because you know in front of news, price will seek out fair value. Right? Price has already given you a rejection and a reversal signal right here. Right? You've gone in with very small risk over here. Got your butt a little tight. Right? Came up, came back down to a 1 minute fair value gap right there. Right? Then took off. Right? So right there, that fair value gap, that order block has done its job beautifully, reassuring you that all of this down here is a balanced price range. Price don't want to go down there no more. So right here at this 5 minute fair value gap, there's no fair value gap on the 1 minute, right? On this 5 minute fair value gap, institutional order flow entry drill, one contract. Now you're in the trade for two contracts, right? Now you're in the trade with two contracts, and price has no desire to come back down here. And your entry, your average price is well below what algo does not want to come back to. So there's no worry in the world for you to be like, hey, is this going to come stop me out? No worry in the world. That's when you go and look at the high over here and be like, hey, what is this high on the SPX? All right. What is this high on the SPX over there? Why don't the SPX line up like the freaking, when I click over to the ES, lines up perfectly. What is this high over here? Wherever the high is. Don't know where to find it on the SP. Anyway, what is the high on the SPX? And you set your alert, right? Because why? You ain't worried about price coming back down and getting you, because price is going to make its way back to equilibrium. Right? Price is going to make its way back to equilibrium. Why? Because we're getting ready to go into news on tomorrow. Right? We're getting ready to go into news on tomorrow. This is the equilibrium for the range that we're in. Price has come down. Right? But Tim, how do you know it's going to go there? We already said it, but we're going to say it one more time for those that like to take notes. Right? For those who like to take notes. Price has gone down. These hourly candles. Look at this hourly candle right here. Look at this hourly candle. This can't non-stop for an hour, just all melting down, came from the new week opening gap through 42 new week opening gaps, cut through, started at this new week opening gap, cut through that one, cut through that one, cut through that one, cut through that one, just cut through all these new week opening gaps, right? To come all the way down here and take care of all of these imbalances. You had a daily imbalance, 4-hour imbalance, 1 hour imbalance, 15-minute imbalance, all of these imbalances right here. Price just melted down. Soon as the news dropped, it used the news to come down and take care of all of these imbalances. And when it got down to the weekly wick, it rejected off. It rejected off. And where did it reject and go back to? Back to equilibrium. Right? That's how you could understand that price, once price melted down and blew past the range equilibrium. Shout out Stacks for bringing it to my attention. Right? Shout out Stacks for bringing the equilibrium to my attention. That's when it clicked in my head. Because if you was on the live, you heard me say, If the afternoon don't present me with anything, I'll just close the day red. But in my mind, I knew it was going to give me something because we had melted so far past equilibrium, right? There was no way price was not going to get back to fair value going in front of the feds. What it do in the morning, I could care less. But price typically moves to fair value and slides to the right. Move to fair value and consolidate. So with all of that knowledge, right? That's what you need to have the understanding about how price moves. Just figuring out what a breaker is, what a fair value gap is, what an order block is, what a swing high is. None of that is going to help you. Well, I ain't going to say none of it. It will help you sometimes, but you will not be comfortable. You will not be able to gain educated, comfortable consistency without understanding how price prints. If you don't know the attitude, emotions, the demeanor, whatever you want to call it, of the market, you're going to be just gambling. If you don't understand the seasonality, if you don't understand market tendencies, if you don't understand how price acts differently from CPI to PPI, if you don't understand how it reacts from FOMC to jobless claims that we get every week, if you don't understand how it does when oil numbers, if you don't understand how price reacts to certain things, you won't be able to make the educated decision to say, hey, if I go in here, I'm not going to choke off my trade out of fear because I took a loss earlier today. I took a loss earlier today, but I'm not afraid. I'm not afraid that price is going to come get me because I entered down here. I entered down here. And so I'm not afraid that price is going to, when it start coming back down to this fair value gap, is going to come get me. I'm not afraid once I scale in here, right? And we still haven't got back to equilibrium. I'm not afraid that price is going to come up here and stop at this previous low and come back and get me. I'm not afraid of that because I know price is trying to get back to equilibrium. And look at the candles on this 5 minute, right? Look at the from the breaking market structure that we got notified of, right? From the breaking market structure, once we left that breaking market structure around our entry point, there is one down close candle on the 5 minute before it hit equilibrium. Just like on this 5 minute, you don't see not one green candle until after it took out the sell side. You ain't getting out one. This ain't nothing you can do to stop me because the algorithm got a reason to get here. And as ICT says, it's constantly repricing it lower and lower and lower and lower to get to where the algorithm wants to get. No matter how much you try to buy, you're not going to stop this drop because the algorithm has somewhere it has to get to. Right? So when you take your loss over here, you suck it up and say, where is price trying to get to? Let it get there and then wait until it gives me something instead of chasing. And once it gives you something and you get in it, right? I got in with one. I got in with one contract, right? Scaled in with another contract once we got to this 5 minute. When it got up here to this equilibrium, I had recovered all of what I lost on that first loss, plus more. Plus more. Because if you understand what price is doing, understand what price is likely to do, understand where price is trying to get to, you can make educated decisions about your entries and your exits, and you can manage profits and losses based off what price is giving you. Because so many times, the reason why I'm going so hard on this, so many times I get DMs from people saying, how do I know when I should close the trade? How do I know? How do I pick my target? How do I know when it's going to come back on me? How do I know? And no matter how many times I tell you, until you learn how to read the price action for yourself, I can't explain it. I can't. Only thing I can do is tell you that this is why I'm doing it. This is my why behind what I'm doing. Instead of just saying, I got in here, I got out there. I got in here because of this. I moved my stop because of this. This was my price target because of this. I wasn't worried because of this. But until you go in and be able to internalize all of those because of this, it'll be to no avail. I've been running my mouth a long time, man. Hopefully this was helpful to somebody. Let me see what y'all talk about in the chat. If anybody got anything, drop it in the chat right now. If you got any questions, want to share anything, drop it in the chat. Except for Robinson. Don't put anything in my chat. What are the ones for? Fuzzy bear. Talk about slowing down here, Q. Green for the New York session. Yes, 90% of the time. It's so peaceful. What did Rhonda ask you? Robinson, does that mean you trade after? Yes, Robinson trade. I'm telling you, man, I be watching some of Robinson videos. He be making me want to trade DR IDR for real. He a beast with it. Y'all should go check out his YouTube page. If y'all ain't check out Robinson YouTube page and you want to see somebody that's like a master at DR and RDR, now his voice is the worst. His voice is complete trash. But if you want to see somebody who got that DR and IDR thing, his page is called Tim Calls Me Robinson. Right? Tim Calls Me Robinson. He loves me so much he put me in the name of his YouTube page. Right? If you click on that link that I just put in the chat right there, if you click on that link right there, it'll take you to his page. He does a great job reviewing them DR IDR strategies. Go holler at my folk. Might be some eraser dust laying around there, but he good people. What was I? You're the trader of the day. Yeah, shout out Stacks. Shout out Stacks. Trade Stacks Currency is the trader. Get off my screen, Robinson. Move out of the way. Shout out Stacks Currency. I don't know if Stacks in here. Stacks, if you in here, salute to you. You are the Black Spider of the day for bringing to my remembrance, as they say with the preachers, Father, bring back to his remembrance the things that he had studied. For bringing back to my remembrance the higher time frame equilibrium, put me in the mindset of thinking about, hey, we going into FOMC. We going to try to get back to equilibrium. Don't worry about shake off that little loss. Keep your head. Look for your setup. We going here. Price going here. I'm going up even when it look bad. Power moves. Somebody put one in the chat. Oh my God. Do not feed into Robinson. See that red bell went over my head. Oh, Stacks. What's up, Stacks? What's going on, man? I appreciate you, Stacks. I'm sorry, y'all. I done been on here an hour. My what's the name just stopped. I'm sorry. I done been on here mad long. I done been on here an hour. We're gonna wrap it up. Yep, took the OTE off the 5-minute 1150 macro. That's what's up. That's what's up, FC. Sniper mode. Pew pew. S22. Pew pew pew. No doubt. Took me a while. Okay, talk to somebody else. Thanks. Still, thanks, Hiller. Still waiting on you to bail. Oh, ball out. Wait a minute. What did I miss? I saw somebody here to learn to share. You welcome. Wait a minute. What did I miss? Did I miss something? Thanks, Hitter. Still waiting on you to ball out. You've been ready. Oh, yeah. Hey, take your time with it. Whenever you ready, you'll know when you're ready. You'll know when you're ready to hop out there in that traffic. Mind you now, when you get out there in that traffic, it's going to be scary. Yeah. It's going to be. You're very welcome. You're very welcome. You're learning to execute. I'm glad to share what I've learned. That's what's up, man. I appreciate you. So now that sell side is balanced, are we to assume that we will take our buy side before coming back down on a normal basis outside of upcoming news? Linda. Listen, Linda. Come here, Linda. Come here, Linda. Got something for you. Got something I want to share with you, Linda. I got something I want to share with you, Linda. Linda. Oh, crystal ball. Oh, crystal ball. Linda Thomas wants to know, now that we've taken out sell side, is balanced, are we to assume that we will take out sell buy side before coming back down on a normal basis outside of upcoming news? Let's go look at price. Let's go look at price and see what price say. Let's go look at price and see what price say. Could y'all tell by the look on my face? Could y'all tell by the look on my face? Okay, let's go to daily candles. Daily candles. We gonna go to daily candles and we gonna look at the chart. The chart. Let me get this alert out of here before it scare me and make me. Okay. So, dollar. Okay, so looking at the daily chart, right? Looking at the daily chart, what have we done, right? So on the daily chart, we came down and took out sell side. Turn on my magnet. Come here, magnet. We came down and took out sell side, right? Sell side liquidity. Once we came down and took out that sell side, right? We came down into an imbalance, right? Into a breaker over here, right? Into this long, extremely wick, right? We got opposing fair value gaps there, right? Yielding a potential balanced price range, right? And then we reject it, right? So we got the rejection bringing the draw on liquidity to the high that brought us down to that low, right? So, God dog it, I hit sell side. That's Robinson's fault that I hit sell side. Then we got the rejection, bringing the draw up here, right? So we came up and we hit that buy side and rejected off it immediately, right? Bringing the draw back there, right? So now the buy side is there and the draw is here now, right? So what is standing in the way of that sell side, right? We had us a handy dandy I'm sorry. I'm big out. Big out. Wrong candles. God dog it. Come on, Tim. Can't even pick out the right candle. Got us a humongous breaker right there. Huge. We're gonna go down. Right up there. So that's your daily stuff. Right. So we're coming down. We're coming down. Right. So once we got up there, so Monday, we just stayed up here, hovered above the breaker on Monday. Then Tuesday, we melted all the way down. And that first hourly candle, look where that first hourly candle happened to stop. Right. Let me move my arrow so you can see that. Right there at that breaker. Look how ingenious that is. Right. That first huge meltdown stopped right there. Right. So now go back to the daily. Right. Going back to the daily. Stretch it back out. So now we've come down. Right. We've come down. And when we got all the way down here to up, I left one out. I'm so sorry. I am so sorry. I am so sorry. Now, I still haven't fixed these yet. These are still under the old style. Stand to the right. Okay, so I forgot one. There you go. So this is the daily stuff that's in the way of that sell side, right? So on the daily level, right, the last line of defense for this to bounce up was this fair value gap. The last line of defense was the order block, but you had the fair value gap, the breaker, and the order block, right? So price came down to the order block and rejected, right? Came down to the order block and rejected. Now, barring any news for tomorrow, if price comes down, right, it failed to get to the low, right, came down, failed to get to the low, and had a heavy rejection, and the body of the candle is respecting this breaker, respecting the order block. It totally respected the order block and the fair value gap. So the body of the candle is respecting all of the PD arrays. Now that turns the that turns the draw, the attention of the draw back there, right? Now the draw is back here because we failed to get to the low and we rejected, right? And we didn't only reject, we rejected off of discount PD arrays. Heavy rejection off of the discount PD array. The bullish PD array did its job. The body of the candle respect the PD arrays, the fair value gap, the breaker, the order block did its job, right? So now the draw is up here, barring any news, right? Barring any news, the draw is up there. Now, news trumps charts. So let's talk about what the news can do. Great news can push us further towards taking out the buy side, right? Extremely bad news can bring us back and take out this sell side, attacking this fair imbalance, right? Because we already came down into this one here and stopped at this breaker, right? But extremely bad news can take us down to attack that imbalance, right? Does that mean all hope is lost? It can mean that they're just using the bad news to take care of this imbalance, right? And then take it back up. Because if we come down and take out this imbalance and get a rejection, right? Just say we come down to this imbalance and get a rejection and close back above this low, right? Where does that put the draw? Back at this again. So until the news comes out, that's what the price is saying. Right now, barring any news, the draw is right there. Because that's what price has told us. We came down and rejected off of this. The draw would be there, right? How would little Timmy Rogers trade that? For price to drop down into any type of discount in this range over here of this candle, price come to any type of discount and to give me a reversal signal to go up. That's how I would trade it, right? If you haven't entered off this order block or this fair value gap already, aligned with this breaker, if you haven't entered on the way down, coming down here, waiting until price drop down to some type of discount, then going up, right? What type of discount would I be looking for it to take, right? Depending on how far up we go, right? I wouldn't want it to come take out that sell side right there, right? But depending on how far up we go, right? You know, depending on how far up we push, just taking out sell side below this little area right here. Because this is the new candle we just started right here. Right, 6, 7. This the new candle. These two green candles right here. This the new candle we just started. New daily candle we just started right here. You know, push up a little bit. Right, get up into this imbalance a little bit. Come back down. Take out this sell side right here. Give me a reversal signal to go up. Would be lovely. That's how I would trade that. Hopefully, I didn't take too long answering that question, which I know I did. It's good to see the same thing real time during the day that we talk about in the recap. I got in at 11:42 and out at 3:20, $2 profit. I intentionally brought way out the money. I went. You know what I did? I went in. I went to the SPX. I'm glad you said way out the money. Right? Because we talked about it. Remember, we talked about this the other day when I talked about in the money, at the money, out the money. There's no right or wrong answer. It just depends on the volatility, right? So what I did, I went to the SPX, right? And I looked at, I said, okay, where are we at? This is this drop dead drop right here. This is today. This is this morning right here. This when we start out, right? I said, this is the top, right? That's what we started at 41.61, right? We came all the way down here to like round 40. Let me put the thing on it so I know, right? I looked, I said, hey, we started there. That was the bottom, right? So we started at 41.60 and we ended at 40.89. And now we're going back up. What strike price do I want to buy? Right? I opened up my my handy dandy options chart, right? And I looked at what they had in the range of where they think price can get, right? And I said, okay, I don't want to get a 41.60 from the beginning of the day. That's too far, right? I said, we're around here somewhere, like around 4,100. We was around 4,100 somewhere, I think, like right around here somewhere, right? Right around 4,100. So I said, I don't want to get 41.60. We're at 4,100. I'm going to split that in half. I'm going to get 41.30. I'm going halfway in between where we are now and where we started this morning. And as soon as we get ready to start going, I'm getting 41.30 because I'm going to play the momentum. I'm not going to get 41.30 and just let it consolidate and eat me up. I'm going to wait until we getting ready to go. When I get my entry signal, go boop, come down. That's when I'm going in. So I got the 41.30 to play the momentum, right? And I got them at 80 cents a piece. When my alert went off and I came back here, they was at $4.85. They know they was at $4 and it was at $4 and something, $4.50. It was at like $4.50, right? When I came back here, it was at $4.50. So I'm going in trying to get my platform up to, you know what I'm saying, set my target, get out. As I'm pulling my platform up, because it had took out a high. I had it set to when it take out a high. That thing start pulling back. It might have been on this red candle right here, right there. That thing started dropping like it's hot. It was dropping so fast, I ain't even had time to set my target. I just right click and just put in a stop loss. At 250, right? I just put in a stop loss at 250 just in case it was keep dropping. And then I was like, okay, let me go ahead and set my target that I want. And you know how the XPX premium be moving. I set my target. I had my stop at 250, set my target. Then I was like, okay, I'm good. And then when I came back later, it hadn't stopped me out. So I got like, instead of getting almost 500%, I had like 218%. But I ain't mad at it. But that's how I picked my out the money. What's the name? This today. That's how I picked it today. Hello. I'm new here. And oh. Well, everybody, please bow with me in a moment of prayer for Mrs. Robinson. Dear little baby Jesus. We like to offer up every prayer that we got for this strong, beautiful woman. Hey, I'm sorry, y'all. I'm so far behind on the chat. I ain't even much gonna get to it. I ain't even gonna hold you. Hold up. I gotta read this one here. I could tell I've been listening for a while. Plus, I live with used to the shenanigans. Used to the shenanigans. Yes, congrats again to Rhonda. Was that Rhonda?
that talked about the thing. I think that was Rhonda. No excuses. Ain't no excuses. The crystal ball don't discriminate. That's something on my face. Hey, man, I appreciate y'all for hanging out. Hopefully I said something that helped somebody. You know what I'm saying? Try to keep it lighthearted and fun, but hopefully I truly hope I said something to help somebody. Again, I really appreciate y'all. I don't want the crystal ball. I don't want the cow Putin. I don't want the cow Putin. There you go. I appreciate y'all for helping us hit the goal. Really appreciate that. From the bottom of my heart all the way down to the sole of my feet. Take advantage, man. Take advantage of today. While you have the opportunity to. What are you talking about, Tim? Let your loved ones know that you love them today. Take advantage of the day right now. Nobody's promised tomorrow. Right? If your parents are still here, if you're blessed enough to have both your parents, if you're blessed enough to have one of your parents, take advantage, man. Nobody's promised tomorrow. I got a text message today from my mother that told me, hey, your brother having surgery today. Hold that phone. His old lady, like, I thought it was just a regular appointment, but he having surgery. What in the haberdashery? The last time I got hit with that was back in 2002 when my father was going for like just a routine procedure and never came home from the hospital because he didn't tell anybody. Well, he didn't tell them that they had found cancer, right? He had told me, but I thought he told them. And then all of a sudden, your brother just had surgery today and he ain't told nobody nothing. It just all came flooding back. But I say that to say nobody's promised tomorrow. Not you, not your parents. But if you're blessed enough to still have your parents, call them and let them know how you feel. Go by your mama house here. Go by your daddy house here. Go wash a car. Go wash it. Go take the trash out for them. Go let them know that you love them. Let them know that they are appreciated. But don't just say it. Don't just show it. Say it, show it, and confirm it. Open up the lines of communication with your significant other, with your children, with your friends, so that they'll understand how you need to be shown love and you'll understand how they need to be shown love. Because one of the worst things in the world is be doing all you can to show somebody that you love them and they're not receiving it because you're not speaking in their love language. That's bad. But hey, man, like I say, nobody's promised tomorrow. Take advantage of the day. Do not put off till tomorrow, because I've been there. And one day that tomorrow is not going to come. Maybe your tomorrow that don't come. Somebody did an armed robbery at the mall today, and there was a shootout. I got an email from the school saying, hey, we've been put on a soft lockdown. How did they word it? They said we've been put on a soft lockdown. We've been put on a soft lockdown. Parents, there was a shooting / armed robbery at the mall earlier today. We have been advised to go on a soft lockdown, securing the perimeter of the school as a precaution. Students will be able to move inside the building, but will not be allowed outside. I will send out a message once the soft lockdown is cleared. Thank you. Don't play with me like that. Don't send me no email like that. They better be glad I saw both emails at the same time. The soft lockdown and the lockdown all clear. I saw them both at the same time. Because if not, the Tonka would have been on the way to the school. Anyway, I appreciate y'all for always tapping in, man. Hopefully I was able to say something that meant something to somebody. If not, I'll try again tomorrow, man. Same bat time, same bat channel. I don't know what a soft lockdown is. I guess, I don't know. I guess the police that be out there don't pull his gun. I don't know. I don't know what a soft lockdown is. But thank you, E-Rock. Hey, man, that's it, man. I'll see y'all in the morning at 9 o'clock for the overnight price. Action. Hey, Ms. Robinson,
Appreciate you for hanging out with us, man. Hey, I'm gonna pray for you hard tonight because dealing with him, I feel your pain. I feel your pain. Whew. I see y'all in the morning, man. Gone. Yeah.